So a number of my real estate agents lately have called me and asked me about their escrows that keep falling out when they are the listing agent. And they told me that they vetted the file properly, they thought, and tried to avoid any pitfalls for their seller. But unfortunately, those pitfalls still came up. So this video here is basically for real estate agents, both listing and buying, if you get a pre-approval letter. And you want to make sure it's good so you don't fall out of escrow. So, a couple little things here I'm going to discuss that should help you on a move forward basis not fall out of escrow, unless it's an act of nature. So, a couple little notes. If you ever hear a mortgage loan originator, a mortgage broker, a loan officer, what I am, if they ever blame the underwriter, that is the biggest red flag that you should take as a real estate agent, because a true, strong mortgage broker loan originator should be stronger than any underwriter and all 20 underwriters that you can pick out of a hat combined, because a true, strong originator has to know underwriting guidelines better than anybody. And if the underwriter knows more than you about your client, you're in trouble. Second thing, unless there is something significantly new introduced to your escrow, it should never not close, and for that matter, not close on time. So, if you hear somebody blaming the underwriter, they are actually a very weak loan originator. And again, unless something very significant is newly introduced into your escrow should never even close late. All right, so I'm going to give you the reasons some of these things happen. The main one I know about is colleagues and competitors of mine, for that matter. Most of them are yes people. It's always nice to say yes, but you can't be a yes person in the mortgage business when you're writing pre-approvals, because all you're doing is setting people up for failure. So if your mortgage broker is a yes person, you're in a bad spot. Like I say yes a lot, just don't be a yes person. And then another thing they might have done is they didn't adjust to current underwriting conditions and interest rates. So they just didn't do their homework and continue to do their homework. After the first time they wrote the pre-approval, for whatever reason, something could have changed, and they just didn't keep up with it. And a third reason is that they probably didn't look under the hood enough at some little documents, because as we all know, one piece of paper can change a whole mortgage underwrite up until the very end. And like I said, unless there's something newly introduced during the escrow, you should never close late, and that one piece of paper that blows out people's deals, unless it was newly introduced, you should have had it up front. You should have known what to ask for, and that could have avoided your mortgage fallout. So, as a real estate agent, write these things down. Here's a few things to ask when you're properly vetting a pre-approval. Number one, is the loan locked? Ask them if the interest rate is locked, because that's how they qualified it, and if it's on the edge of qualification, you better have that rate secure for your escrow to close under those terms. And also ask them, do you have your loan locked? And do you also have a backup plan if this doesn't work? Second thing to ask them, what is the debt to income ratio? Now, there's a front end debt to income ratio and a back end debt to income ratio. Front end debt to income ratio is their housing expense. Back end debt to income ratio is when you take their housing expense and add on all their other expenses that show up on their credit report, and that gives you your back end. So, ask them what the front end and the back end debt to income ratios are, and if those are okay with the underwriter they're having it underwritten with. Something else to ask, how do they take their income? So for example, if they're W-2'd and they have a bonus, ask them, are they W-2'd and do they have a bonus, and is that bonus acceptable for use on an ongoing basis with the bank or the investor? Let's say they're self-employed. For example, you can ask, is the client 25% or more owner of the corporation? And if they are, have you taken those corporate tax returns into account? Something else, their FICO score. Find out what their FICO score is, and then go on to say, are there any late charges or derogatory credit that can hinder this from closing? And they better know the answer to that. And the last thing to ask is, what are the post-closing reserve requirements after we put down our down payment? Does the client have enough post-closing reserve requirements to meet the underwriting standards? So, If you ask these simple things, once again, is the loan locked and do you have a backup plan? Number 2, what's the debt to income ratio front and back? Is this acceptable by the underwriter? Third thing, how do they take their income? If they're W-2'd, is there a bonus that can be used and taken into account? If they're self-employed, have we taken into account their corporate tax returns if they own more than 25% of them? The next thing, again, what's the FICO score? And is there any late or derogatory credit that can hinder us from closing, you need to ask? And once again, post-closing reserves, after we put down the down payment, are we going to have enough post-closing reserves to meet the underwriter's guidelines that you're having the file underwritten with? And once you do all that, if you have straight answers, you should be safe on your pre-approval. If you still have questions after that, please, as always, as my agents know, don't hesitate to reach out to me. I will help you vet the pre-approvals, whether you're the listing agent or the buyer's agent, and we'll make sure, we'll do our best to help your escrow not fall out, regardless of what side you're on, because I know how hard you have to work as realtors to get clients. I can't even imagine it, sometimes walking around in this heat that we've had the last few days, and then having it all fall out because you had a weak mortgage originator manning the ship, so to speak. So, those are the things you ask. If you don't get your answers there, raise a red flag, and then you're more than welcome to pick up the phone and call me, and I'll help you vet that offer. Okay, everybody, thanks for watching. Quick little tip to hopefully save you some time and agony and help your clients out all the way. Thanks so much. Have a great